A lot of the volatility in the market recently has been blamed on the blowups of various carry trades around the world, particularly in Japan. And in this video, I'm going to explain what is a carry trade and why carry trades pose such a systematic risk. Or to put it simply, a carry trade is when a speculator borrows in a low funding cost currency, or generally one with a very low interest rate, and reinvests it in an asset with a higher return. Most oftentimes, it's a higher yielding currency, but it could also be stocks or some other asset class. The most common currency for carry trades tends to be the Japanese yen, because their interest rates have been zero or negative effectively for the last 30 years. And so that's why people use it, because it's a cheap carry cost. And really, basically, since 2012, the yen has been steadily depreciating. So FX risk really hasn't been as much of a concern. When the Fed had ZIRP, the US dollar was often also a carry currency that was commonly used. And when the ECB started putting on QE pretty aggressively, the euro has also been used as a carry currency. So it's not only the yen, it's just generally very low yielding currencies. And the most common carry currencies are the whatever country's the highest interest rates at the time. Currently it's the US dollar, but historically the Aussie dollar and the New Zealand dollar have been very popular carry trades because they didn't bring their rates down as low as the other developed nations did during the post-financial crisis economy, and Chinese capital markets just simply weren't liquid enough to put on a carry trade. And so that's kind of how it generally works on a currency basis. And what happens, it works great because, say for example, you borrow yen at zero, you invest in treasuries at 4.5%, you collect the spread minus any foreign currency translation costs. So let's just say in this example, those are about 1%. So you're getting a 3.5% return with effectively no risk other than FX risk. And as long as the rate spread doesn't tighten or the currency doesn't move against you, this trade will work for a long time. And this usually is the most lucrative way to get leverage to finance more bigger speculative bets. So how does the carry trade go wrong? The carry trade goes wrong in one of two ways. One, if the spread between the carry currency and the yield currency narrows too much that hedging costs or foreign currency translation costs outweigh the yield spread. And that's another way that people can use to protect themselves. They can hedge the currency, but there's often a cost to that. And so say, for example, the Fed cuts rates down from 5% to 2% on the Fed funds, and the whole curve gets pulled down. And the Bank of Japan raises rates from 0 to, say, 0.5%. That 1.5 may not be enough yield to compensate for hedging and currency translation costs, or it might even be a negative cost. And so as a result, a lot of people will be forced to unwind their carry trades. And what that does, it strengthens the carry currency at the expense of the yield currency. And that's what happened a couple Mondays ago when the Nikkei crashed and the Japanese yen dropped from about 160 down to the 140s, was because a lot of these people who are in carry trades, all of a sudden, due to yen appreciation if they are unhedged, and or the prospect of the spreads narrowing if they are hedged, force a lot of people to cover their carry trades or at the risk of getting margin called on their positions. And that's what caused a lot of the disruption that happened in the markets. And that's the other thing, if you're not hedged, the risk is currency risk. So say, for example, you borrow in yen, you buy in dollars, your spread's 5%. But let's just say the prospect of the Bank of Japan tightening monetary policy, and the Fed easing, has caused currency markets to shift in a way that's adverse to the carry holder. Say the yen rallies from 160 to 150, which is about 6.25%. Then that rally is great. A 6.25% loss from the yen rallying against the dollar is more than the 5% that you're getting on the carry for the whole year. And so now your carry trade is underwater. So If the yen starts to appreciate instead of depreciate, the carry trade unwinds. And this explains why the Japanese yen tends to rally against the dollar and even more so against other riskier currencies during financial crises, recessions, and bear markets, because all of these yen carry trades are unwinding. It's not that Japan is the world's safest currency. It's just that if you're speculating and the assets that you've bought with financed by yen are now a lot less than your posted margin, you get margin called, you have to sell those assets and then buy back the yen, and that causes yen appreciation. Or if the spreads are negative, you want to get out of that trade before you lose more money, and so you get out of the yield currency and pay back your loan in the carry currency. And so that's why when USJP going up is considered risk on and the yen appreciating is considered risk off, because a lot of speculators and carry trades are forced to unwind. So how much risky is carry trades in terms of systematic risk? I think they're more of a symptom than a cause. It's just a source of leverage. If there wasn't carry trades, or if the Bank of Japan increased their rates so they were no longer the carry choice, that would just switch to whatever G7 currency has the lowest interest rates or has the weakest profile, is likely to depreciate the most. So it's not really that ending the yen carry trade would end carry trades. And if you end carry trades, people would just speculate in their local currencies. So it's just a means of, or buy derivatives straight up, like options. And so I don't really think that carry trade, in a sense, is systematic risk, more in the sense that the carry trade unwinding is usually the byproduct of some other systematic risk hitting the markets, and speculators even getting margin called or covering their trades to take off risk. Let me know what you think. If you have what other questions you have about the carry trade or any comments, feel free to leave them. Please like, subscribe, and share. And thanks for watching.